Good evening, friends. This is CMA Mallikarjun Gupta, and today I'll be sharing with you few of my thought processes, and I'll run through what is cryptocurrency, how it is taxed across the globe, and what are the challenges we have when we deal with cryptocurrencies as on date because we do not have any registrations in place. And the bill which is going to be passed in the parliament, what we can expect from that bill actually. So before we start, I would like to introduce myself as CMA Mallikarjun Gupta, having over 2 decades of experience in areas of taxation, finance, technology, sales, operations, marketing, and on fintech side. I also mentor few of the startups with respect to their product management as well as on go-to-market strategies. Now, let's discuss what is cryptocurrency and how it is being evolved and what are the challenges which we see at this point of time due to lack of clarity in the compliance provisions. In the initial days, the kings used to issue the currencies of their kingdom and they used to be accepted in that kingdom. And when they had international trade or beyond the boundaries of the kingdom, then there used to be an exchange rate predetermined or based on an agreement between the traders, and that's how the trade used to flourish. Once the currencies came into picture, they also evolved, and today we have two methods of issue of currency by any federal government. One is backed by the gold reserves. Like in India, whenever the Indian government issues currency, they have an equivalent amount of gold reserves parked with the central bank, that is the Reserve Bank of India. And we have another set of currency that is called as fiat currency, in that they're not backed by any sovereign guarantee or gold. Based on the demand and supply, these currencies are issued, and not when we say issued, they're printed and circulated in the market. Now, with the physical currency being coming into place and digitalization which has started from the last decade or so has picked up the momentum very high, and digital currency started coming into place. Even though we call it as digital currency, it is not technically a digital currency, but it can be termed as a digital transaction. Today, I may be using a Paytm wallet or an UPI or any bank wallet or any other mechanism basically to pay for my services or goods which I purchase in the market. It is a mechanism through which I am making the payment, but still there is an existence of physical money. And now comes the cryptocurrencies. What are these cryptocurrencies? Is it a class of asset? Or is it a financial product? Is it money? Or is it a digital money? Or is it internet money? Or is it internet gold? Many people call it as internet gold or digital money. But in reality, it is none of those things basically. It is a virtual currency, or it has these following properties. It is similar to money but not money. It can be brought and hold or saved by any person. It has no geographic restrictions. It can be used for procurement of goods or services, and it can be created by any individual. Unlike the current currency, which is issued by the federal governments, in case of cryptocurrency, any individual can create his own cryptocurrency. As on date, we discussed this point. We have more than 13,000 cryptocurrencies across the globe, and the number is increasing on day by day. Many private players, individuals like you and me, if we have the technical capabilities, we can even also launch our own cryptocurrencies. Now, how are these cryptocurrencies created or generated or mined? These cryptocurrencies are mined or created using blockchain. Now, what is this blockchain? Blockchain is the process or the mechanism where multiple people work on a common algorithm, and based on that, they create a robust architecture, and it is very secure and safe. So, cryptocurrencies are created using blockchain. And what is cryptocurrency and from where it is derived? It is derived from the word crypto techniques basically. So, in technical language, when we say crypto, or it means encryption. So, whenever data is passed between two different networks or between two different systems, it will be encrypted so that nobody can read that data. So cryptocurrency is again based on the encryption standards, and based on that, cryptocurrency is generated by a set of users. Now in the blockchain, if I'm a user and if I'm able to solve a particular algorithm which can be used by multiple people down the line, I may be rewarded directly or indirectly. When the reward is given in form of cash or something, there is no questions asked. But if I am rewarded in a digital currency or in cryptocurrencies, that is what is stored in my wallet or in my account, and I can use it for purchase of any goods or services with that particular currency. Bitcoin is one of the commonly or well known cryptocurrency in the world as on date. It started more than a decade back. There was not much traction at that point of time, but today there is lot of traction, and we have Bitcoin as one of the currency, and which is being traded very vastly across the globe. Now these cryptocurrencies are handled or exchanged or purchased through cryptocurrency exchanges. Similarly, the way we have the stock exchanges where an individual can buy or sell shares, or where companies can go and list their shares there, and which can be offered to public. Similarly, cryptocurrencies provide a platform where people or investors like you and me can purchase and sell cryptocurrencies issued by different individuals. Though it is used vastly across the globe. Many of the countries, or except one country in the globe, no one has recognized cryptocurrency as a real currency or money in their countries. Which means that though it is termed as a currency, it is not an official mechanism through which the governments make payments or individuals can buy and sell goods. El Salvador is the only country which has declared cryptocurrency as an official currency. And coin exchanges are there, and coinmarketcap.com is a portal which provides you the robust information on various cryptocurrencies which are there in the globe as on date and how they're traded basically. Based on the market capitalization, the famous ones are coming into picture and people started investing in those cryptocurrencies. So the well-known things are Bitcoin, as we discussed, and the second one is Ethereum, and third one is Binance coin, basically Binance coin. So these are to name a few, and similar to the wallets what we have today, you have wallets also provided by the exchanges where the individual can purchase and trade assets in cryptocurrencies, which is commonly termed as NFTs. So if I have few cryptocurrency coins I have in my account, I can purchase a digital painting, and that digital painting I may purchase it for 2 or 3 coins today, and it can be sold at a later point of time, 5 or 10, and that is where I book profit. And as we have seen it from a legal standpoint of view, except El Salvador, none of the countries have declared it as a official currency. Now, if that is the case, is it legal to trade in cryptocurrencies? Can I invest in cryptocurrencies? What are my tax implications if I start trading or investing in cryptocurrencies? Or if I make any purchase of goods or services using cryptocurrencies? This is the biggest question which every individual is having. Yes, there are people who are making and minting money with these cryptocurrencies. But the compliances is always a low hanging sword till we have a clarity from the respective nations or in the individuals where they reside in different countries. So coming back to India, in April 2018, RBI has issued a circular stating that dealing in cryptocurrencies is illegal. That means, as an individual, I cannot invest in cryptocurrencies. And banks were asked not to facilitate any transactions in cryptocurrencies. So, that issue, based on that, many people stopped investing, and many of the exchanges had a lot of challenges. And Internet and Mobile Association of India has approached the Supreme Court of India, and recently they passed an order stating that it is intruding into the fundamental rights of doing business, and RBI has to withdraw that circular based on the Honorable Supreme Court's judgment, which clearly says that we cannot stop any individual from doing business because it is one of the fundamental rights provided as per our constitution. Though it is made enable for people to invest and transact in cryptocurrencies, but RBI has come down again, requesting all the exchanges to mandatorily manage or do the KYC, know your customer details basically. So this know your customer details or KYC process is now being done very vigorously by all the crypto exchanges who are supporting in India or facilitating Indian investors. In the last 6 months, there were about 2 lakh crypto accounts holders' accounts have been suspended because the KYC is not clear or not done properly. Now, let us take a step back and understand why RBI is very particular on KYC. The reason is very simple. Being a cryptocurrency, there is no governing body. Anybody can mine cryptocurrencies, can launch their own cryptocurrencies, purchase them, sell them, or transfer them. Since there is no tracking and accountability, there is a high possibility. I don't even like to use the word high possibility, but it has come across multiple instances across the globe where these cryptocurrencies have been used by the anti national forces for doing anti national activities. Some of them have started using it for payment of in cryptocurrencies to the terrorists or for smuggling activities or in Hawala transactions, which are of a grave concern for any nation's on security interests. So that is why many of the countries or most of the countries are hesitant to announce cryptocurrencies as their official currencies. Today, if we talk about the stock market, every script it is regulated by the stock exchanges and the relevant tax in the respective countries. In India, we have the SEBI. So SEBI has formulated certain guidelines which companies can issue stocks or shares, rather basically shares if we talk about the Indian context, and what is the valuation process adopted, what is the book value. So there are financial statements which the share issuer has to publish inform the public domain about the financial transactions. That is, the financial statements have to be published at regular intervals. But in case of cryptocurrency, there is no such mechanism to track and measure. So that becomes the biggest challenge for regulation. Now, since there is no regulation and since it is not announced as an official currency, can we trade it? Yes, we can trade it. We can purchase, invest, speculate, sell. All these activities can be done. But how it is being done? Yes, as we discussed, it is through the crypto exchanges which are facilitating this transaction. Then how do I know that how many coins I'm holding? Or how do I know that these many coins are purchased from Bitcoin or Ethereum or something like that? So for this, the exchanges use something called two keys. One is a private key and other one is a public key. So private keys refers to the individual's login ID and password. Then what is this public key? Public key refers to the individual's location or address where this account holder resides. So on a combination of these two, the transaction happens between various stakeholders on the on the crypto exchanges. Now, with this case, one has to be very careful. Like your ATM pin, the private keys also has to be maintained in a very confidential manner, or anybody can start trading on behalf of you or utilize it for anti-national activities. So this is one side of the coin. But what about the other side of the coin? Do we really see any benefits in cryptocurrencies? Yes, there are huge benefits on cryptocurrency transactions. Today, if I need to do any cross border trade, I need to approach a bank. I pay them in Indian rupees. and they remit to my supplier in US dollars or pounds or euros or whatever is that currency. Now, if I'm importing goods or services into India, so I need to approach my bank, and my bank has in turn has to approach to my supplier's bank, and then the money transfers from a supplier's bank account to my supplier's account, to the supplier's account. And in case if my bank or supplier bank does not have this facility of foreign transactions, then they approach third bank basically. And banks being a commercial entity, yes, they do offer services, but being a commercial entity, they also have to meet their operational costs and pay dividends to the stock shareholders. So they charge you some amount of transaction fee when I convert Indian rupees to US dollars and when the remittance takes place to my supplier who's sitting outside India. In this whole process, what is happening is time is involved and cost is involved. So these banks are acting as a mediators between me and my supplier for transfer of funds. But if I route the same transaction using cryptocurrencies, there is no middleman, which means that I'm interacting with my supplier directly. I'm paying him directly without intervention, without any third party intervention. What does it mean? It means that I'm minimizing on the foreign currency conversion charges and the bank charges which I need to pay and what my supplier also has to pay. And number two, the transfer is happening instantaneously. That means if I'm transferring money using a crypto exchange for Bitcoin, using Bitcoins or Ethereum, it gets credited to my supplier's account in a fraction of a second. So this is the major advantage basically. Till few years back, nobody has envisaged or thought that middlemen can be eliminated. They said it is next to impossible, cannot be achieved. But with cryptocurrencies in place, it is as simple as that. Of course, it is having its own set of challenges when it comes to the security concerns. So, today, if you see many people who are working overseas, the expats, what we call in the common parlance, have started transferring funds to their Indian cousins or relatives or family members using these cryptocurrencies basically. Or every time they have to transfer money, they have to pay some banking charges basically. And it's amounting to billions of dollars across the globe if I accumulate all the transactions carried out for the cross-border transactions. And the next question which may come up into anyone's individual's mind is, are cryptocurrencies safe and secure? Yes, they are very much safe and secure because the process used is blockchain and with the combination of private and public keys. So at any given point of time, audit logs are maintained and they can be easily traceable. Apart from this, we have also seen certain instances where millions of cryptocurrencies have vanished from the individual account holders. Since it is a system driven thing, there can be hacks and that can be misused by the hackers to empty the wallets basically of the individuals. Now, when it comes to the crypto exchanges which are maintained across the countries, that means there is a trade and sale happening. When there is an activity of trade and sale, which means that there is an implication of taxation. When we say taxation, it can be both direct taxes and indirect taxes. So when it is indirect taxes, when we say indirect taxes, it's like my GST or VAT or sales tax, whatever we call it. And direct taxes is like my income tax. Now let us take how it is being implemented across various countries today in the globe on the cryptocurrency transactions, or how they're taxed rather. So when it comes to the United States, the US Treasury Department has started issuing circulars on treatment of cryptocurrencies from 2013 onwards. And in US also, it is not officially classified as a currency, but it has been declared as a money services. And any profit derived on these money services, which is an asset class, on that taxes have to be paid. So when we say taxes, it is predominantly the direct taxes. That is the capital gains comes into picture. Either it is the short-term capital gains or long-term capital gains based on the holding period. And Canada, the next country which I would like to discuss is on Canada. Canada is not has not treated it as a money services business basically, or not as a money service transaction, but it is treated as a financial transaction. And because of that, anybody who is dealing in cryptocurrencies, they have to pay taxes on that. Canada treats it as a commodity. The moment it is treated as a commodity on purchase and sale, there is a tax implication. So again, it is to be treated as a barter transaction. Once it is a barter transaction, then GST or the Canadian GST comes into picture. And every crypto exchange or the crypto coin issuer has to register with Financial Transactions and Reports Analysis Center of Canada, FinTrack basically. So in that way, Canadian government is regulating it. Give me a moment, friends. I could see a chat window, a message stating that is there any streaming problem? Please confirm if you're able to hear me and see the video, because I could see a message from Raviji stating that is there any problem with the streaming. Perfect. Then let's go ahead. Now coming to Russia. Russia is also not classified cryptocurrencies as currency. So people can invest in cryptocurrencies, but the new regulation says that from April 2022, every person who is holding cryptocurrencies have to report it when they file their individual income tax returns. And if they don't do that, they have to pay a penalty of 10%. So in Russia, any trading that has taken place on cryptocurrencies and on that profit, they have to pay income tax. In United Kingdom, the crypto exchanges have to register with the Financial Conduct Authority there. And there is also, they're not treated as currencies, but people can invest, and whatever profits they earn on that, they have to pay short-term or long-term capital gains. So if the capital gains is up to 12,300 pounds, then they are exempted. And if the capital gains of the profit is more than 12,300 pounds, then they have to pay tax on that according to the rate in which they fall, basically. Now, coming back to Switzerland, why I'm talking about Switzerland is a very different case, basically, here. So far, we discussed about Canada, Russia, US, and UK. In Switzerland and other countries, what we discussed or what we have the taxation treatment is a small difference. The law which is applicable in any of these countries is applicable to all the people residing in different counties or provinces or states. But in Switzerland, the cryptocurrency taxation differs from county to county or province to province or state to state. This is one of the major differences between other countries and taxation of cryptocurrencies in Switzerland. And Switzerland treats them as digital currencies, and they're considered as virtual currencies. They can be used for digital payments and they're considered as virtual currencies. When I say virtual currency, it means that they can use it for making of payments. Zurich treats them as virtual currencies, but when you go to the Bern, they treat it in a different manner and they're classified as miscellaneous assets. That means they're not treated as virtual currencies, but they're treated as private assets. So, in case if you go to Switzerland, you have to be very careful in which state you are staying, and based on that, the cryptocurrency tax implications will come into picture there. Now, let's discuss it from an Indian point of view, basically. When we say in India, similar to the other countries, in India also, cryptocurrencies have been not classified as an official currency or money. Now, if the same has to be classified as money, then the Reserve Bank of India Act has to be amended. So Section 22 and Section 26 of the Reserve Bank of India Acts have to be amended to classify cryptocurrencies as money. Then at the same time, if I don't want to classify it as money, can I classify it as security? If Government of India wants to classify it security, then the relevant provisions of the Securities Exchange Board of India has to be amended. Today, if I see the definition of security as given in SEBI Act, let me read out for you basically. Securities include shares, scrips, stocks, bonds, debentures, debenture stock, or other marketable securities of like nature in or for any incorporated company or a pooled investment vehicle or other body corporate. It can be a derivative or units of any instrument issued by any collective investment scheme to the investors in such schemes. Security receipts as defined in clause ZZ of section 2 of the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002. Units of any other such instrument issued to the investors under any mutual fund scheme. Securities shall not include any unit linked insurance policy or scripts or any such instrument or unit by whatever name called, which provides a combined benefit risk of the life of the person and investment by such person and issued by an insurer referred to clause 9 of section 2 of the Insurance Act 1938. Units or any other instrument issued by any pool investment vehicle. Any certificate or instrument by whether whatever name called issued to an investor by an issuer being a special purpose distinct entity which possesses any debt or receivable including mortgage debt assigned to such entity and acknowledging beneficial interest of such investor in such debt or receivable including mortgage debt as the case may be. Government securities. Such other instruments as may be declared 22 by the central government to be securities and which has rights or interest in securities. Now seeing this definition, it is very clear that it cannot be classified as a security in India and it cannot be classified as a money in India because of the definition of money given in the Reserve Bank of India Act. So this brings us a big question mark or a debatable topic on how do I call it or how do I classify it and how do I tax it. Now, since it is not money, neither it is security, then what it is? If I do a transaction cryptocurrency, will it attract GST and income tax? So let us see the GST provisions. Now, if you talk about GST, Section 7 has to be very clearly understood for us basically to qualify it as a supply or not for purchase and sale of cryptocurrencies. Now, cryptocurrencies, if I do trading, will it fall under the ambit of supply or not? So, Section 7 of my GST Act says that supply includes sale, barter, transfer, exchange, lease, rental, or disposal. So, since it is an inclusive definition, it can straight away fit as it is a supply. And the other conditions for supply is made or in the course of furtherance of business for a consideration. So if I need to purchase cryptocurrencies, I need to pay money. So there is consideration involved in that. Made in the course or furtherance of business. So I'm purchasing the cryptocurrencies and I'm selling them or investing them and earning profit on that. So the element of business is also covered in that. So this brings us a question that it can be classified as a supply. So once it is classified as supply, the question comes, sir, where is the question of money coming? We have used only or we discussed about consideration. Now, if I go back to the consideration definition in section 2, subsection 31 of the CGST Act, it reads as consideration in relation to supply of goods or services or both includes any payment made or to be made, whether in money or otherwise in respect of, in response to, or for the inducement of the supply of goods or services or both, whether by the recipient or by other person, but shall not include any subsidy given by the central government or a state government. So matter is clear. It says it can be money or it can be other than money. Whether it is paid by you, by the recipient, or it paid by third party, it is treated as consideration. Now, let us see the definition of money given in CGST Act. So, subsection 75 of section 2 talks about money. Now, what is money? Money means the Indian legal tender or any foreign currency, check, promissory note, bill of exchange, letter of credit, draft, pay order, traveler's check, money order, postal or electronic remittance, or any other instrument recognized by the Reserve Bank of India when used as a consideration to settle an obligation or exchange with Indian legal tender for another denomination, but shall not include any currency that is held for its numismatic value. So if I read this definition carefully and understand this definition carefully, my cryptocurrencies are not fitting into this definition of money at all. So it is now very clear. It is a supply under GST because it is qualifying all the major conditions what is to be called as a supply. Now the next question comes is if I need to qualify it as a supply, is it supply of goods or supply of services? That is another biggest question which we have in mind basically. So whether to qualify it as goods or services, let us see the definition of goods. Definition of goods is given in section 2 subsection 41 of the CGST Act. Sorry, subsection 52 of the CGST Act. Subsection 52, section 2. Now, goods means any kind of movable property other than money and securities, but includes actionable claim, growing crops, grass, and things attached to or forming part of the land which are agreed to be sold before the supply or under a contract. And what is service? Service means anything other than goods, money, or in securities, but include activities relating to the use of money or its conversion by cash or any other mode from one form of currency or denomination to another form of currency or denomination for which a separate consideration is charged. Now, it is very much clear from the provisions that it is no longer can be classified as a service. So, what is left over now? It has to be classified as a good as per GST Act. Now, the question which arises to everybody's mind is how can it be classified as a good? Because cryptocurrency is intangible. I cannot touch it, smell it, sense it. But still, can I classify it as a good? Yes, you can classify it as a good if we go back to the provisions of the Constitution of India where it defines what is a good. As per Article 366, Clause 12 of the Constitution of India, goods include all materials, commodities, and articles. So, what is defined as good in the Constitution? It includes all materials, commodities, and articles. What is the relation between a commodity and cryptocurrency? See, here again, I'm sharing my own thought process here. So, for this, I'm referring to a case law Associated Power Company versus R.T. Roy in the Honorable High Court of Calcutta. So the question raised is electricity a service or a commodity? The Honorable Supreme Court has said that though it cannot be felt or it cannot be touched or it cannot be smelled, it has to be treated as a commodity because it can be bought and sold over exchanges. So taking a clue from there, I can pretty much say that cryptocurrency can be classified as commodity by the government going forward. which means that if it is classified as a commodity, that means if I use these cryptocurrencies for purchase of any goods or services, then it has to be treated as a barter transaction. If you refer to the common dictionary meaning of barter, it says that clearly that when one set of goods is exchanged for another set of goods, it is called as a barter transaction. If I go to Pizza Hut and pay in zero point zero 0.03 Ethereums, which means that it is a barter transaction. So what does it mean if it is a barter transaction? If it is a barter transaction, when I am giving this for pizzas, Pizza Hut will issue an invoice and give me pizza. And when I am discharging my liability to Pizza Hut in form of cryptocurrencies, I am in form of cryptocurrencies, which is classified as per our discussion as a commodity. That means it is falling under the definition of good. That means it is a barter, and I also need to issue a tax invoice. So it is very clear now. The moment I treat it as a commodity, and if I use it for purchase of goods or services, then I need to issue a tax invoice. So far, so good. But for a pizza, I'm paying 1,000 rupees worth of pizzas and 5% tax on that. So it is 1,050 rupees. So if I'm giving Ethereum's zero point zero 0.03 Ethereums is equivalent to 1,050 rupees. Let's assume for theoretical discussion. If that is the case, do I need to issue a tax invoice on 1,000 rupees or 1,050 rupees? That is the biggest question which I have. So if I need to issue an invoice, then I need to follow the provisions of the valuation given in section 15. In that case, it will be 1,050 plus GST applicable, whatever is on that. Because I'm paying 1,050 to Pizza Hut in cryptocurrencies, which can be classified as a commodity, and I'm exchanging commodity which is falling under the definition of supply. That is why it is a barter, and when I exchange on barter also GST has to be applicable, and the tax rate here it can be 18% or whatever is the case, which we need to decide on that. Under GST, it then the next question comes, yes, now I am clear that I need to issue on 1,050 my tax invoice. Then the next two questions which comes into anybody's mind is what tax rate and what is the HSN code. So again, we don't have an answer for that crystal clear, where we cannot do any interpretation directly. So that becomes another big challenge for us to transact in cryptocurrencies. And then comes your threshold for registration. So again, the provisions of section 25 will kick in for us. Based on the threshold, if required, the individual or the investor has to take registration under GST and start issuing tax invoices. Now, this is on the indirect tax portion. Now, what is in store for us on the direct tax portion? On the direct tax portion, it is covered under the ambit of the Income Tax Act 1961. Now, when it is coming under the Income Tax Act 1961, and if once we classify as a commodity, then it is very simple. On purchase and sale of commodities based on the holding period, then you have the capital gains applicability. Whether it is short term or capital gains, and you need to pay on it based on the bracket in which the holder of the cryptocurrency is doing these transactions. Then comes normally when you register with any of the cryptocurrencies, just to promote their exchanges, they give something as airdrops to their account holders. These airdrops are nothing but a fractional unit of the cryptocurrencies like Bitcoin or Ethereum or something like that. Are they taxable? Yes, they are taxable under GST. Number two, nobody provides services free of cost. When I go and purchase these cryptocurrencies from exchanges, crypto exchanges, they also charge certain tax charges from me when I purchase and sell. So on those charges, GST is applicable. It is a service and it is taxed flat at rate of 18%. Many of the crypto exchanges which are registered in India are collecting GST and rendering to the government, and there are certain exchanges which are registered outside India, and technically speaking, they also have to collect 18% GST on the charges what they charge from their account holders. And another question which comes into mind is, does equalization levy is applicable on the cryptocurrency transactions and exchanges? That is another biggest question which people are having in mind. So as on date, equalization levy is not applicable on the cryptocurrencies purchased by the Indian citizens. But tomorrow, if government amends the law, then it will be made applicable. Then we have the OIDR services, which is again part of the GST, where the taxpayers who are Indians basically are procuring services from entities outside India to provide a level playing field. The importer or the person purchasing in India has to pay tax on reverse charge mechanism and take input tax credit. Now, that is also another bone of contention for them. So, if I treat it as an exchange or if I treat it as an import of service, then RCM comes into picture. But our discussion, we discussed it as commodity and it is a digital asset. That means these exchanges who are registered outside India have to take registration mandatory in India as per the provisions applicable for OIDR and then charge GST. Now, these are all our assumptions or interpretations based on our understanding of the provisions of the law. To clear this ambiguity, the government of India is contemplating or is planning a bill in the upcoming or in the ongoing monsoon session. So once this bill is out and it is passed in the parliament, then we have a clear clarity on whether to treat it as a good or service. What will be the classification? What will be the tax applicability? How do I report it? How do I disclose it if I'm a company who is receiving or paying or making payments in turn in cryptocurrencies? Today, few of the companies in India have started accepting payments in cryptocurrencies. If entities are accepting payments in cryptocurrencies, how do they need to disclose it and report it in their balance sheets or financial statements? And when if I need to classify it as an asset, it is net realizable value which needs to be declared in my financial statements. If I have an asset, it is having a realizable value, I can do valuation. But the biggest challenge which comes in cryptocurrency is how do I value my cryptocurrency assets? There is no mechanism or methodology to determine this $100 is equal to half Ethereum or half Bitcoin basically. Then the next challenge comes is how do I convert it into monetary terms? Say I am an entity who is accepting Bitcoins. I received 25 Bitcoins from various customers and they're in my account as on 31st March 2022. Now these 25 Bitcoins which are there in my account on 31st March 2022, how do I report it in my financial statements? My financial statements are always reported in INR. So if I need to report it into INR, I need to piggyback on one currency to convert it. Now these all cryptocurrencies are traded in US dollars basically. So I need to find the relevant US exchange, US dollar value, and then go for the relevant exchange rate conversion from US dollar to Indian rupees. Then basis on that, I need to report it in my balance sheet. What happens if if there is a fluctuation in the cryptocurrencies basically? Do I need to treat it as the way I treat it for my foreign currency transactions, exchange rate fluctuations? And do I need to pass the relevant accounting entries at the time of realization? Yes, in case of foreign currency transactions, we do that. But in case of cryptocurrencies, how do I do that? That becomes the biggest challenge for me actually. Today I may have Ethereum, tomorrow some other gives me Bitcoin, third day some other gives me another coin, and I may also start paying it in that coin basically. So in such cases, I need to convert it at each and every transaction level, book profit or loss on that exchange rate and the speculation which is happening basically. Because it is a commodity, I must have purchased one Bitcoin which I received it maybe at $3,000. But when I'm paying it, it may have been appreciated to $6,000. So if I need to pay $3,000, I pay him only half a Bitcoin. So how do I book this unrealized profit or loss basically? In this case, profit. If that exchange has come down to $1,500, then it is a loss. So do I book it at the time of making the transaction for the relevant amount and for the difference at the time of publishing my financial statements? In my personal view, both have to be done. And I have not booked the profit, I have not realized the profit. That means it is still a speculative income for me. And as per the income tax provisions, speculative income is not taxable in India at least. Only on the realized gains only it is taxable. So how do I do that? And the airdrops which are being issued by the exchanges basically, how they should be handled. And the last one but not the least one, if government of India classifies it as a currency, how do it protects the interest of the investors basically? We have seen various scams coming up in India, various banks being collapsed, the cooperative banks and everything. Since there is financial information available, based on that, the regulatory authorities and the government of India is taking decisions and imposing restrictions and merging with them or doing something like that. In absence of all these things, I don't know what is the value, who is the owner, how it is valued, when it is valued, why it is increasing. It becomes a big question, and that is the reason the RBI governor and the finance minister and the government of India are very clear that we cannot classify it as a currency at any cost. If investors lose money, who is responsible for that? Apart from the security interests of the nation. So, as on date, it is a topic in discussion, deliberation, and open for interpretation. So, these are my views on cryptocurrencies and its implications of compliances, basically, or taxation. So, if you have any queries, you can type it in the chat message. I'll try to answer them, or you can reach out to me through my email ID mallikarjungupta at india-gst.in, and I'll be glad to provide you your responses basically if I'm aware of them. Again, a disclaimer based on my interpretation. Hope you have enjoyed the session. Thank you. Thanks a lot for your patience hearing, and stay safe and stay blessed. And please do follow the COVID protocols issued by the governments time to time. Jai Hind.